yeah, you can answer the you can ask a question in the open chat because your question could benefit somebody else. Somebody else may be thinking the same thing and just didn't ask. But I'm going to record this to kind of so this could go along with what we talked about today. But okay, here are all the executions, but you can see it cleaner on this chart. We took all these trades, but we're going to do it on this chart so that you can see it a lot cleaner. So let's start with the trade from let's start with this trade that we took back here at 1:30 in the morning. Okay, this is the trade that we took, and what we did, we were patient and we waited for the cross. Okay, here we were just trading sideways, low volatility. You could see the we were sitting above the 20, which is the midline on the Bollinger bands here. We have our own adjustment for the Bollinger band so that it works with our strategy. And you could see it was contracting, stayed contracted, and then here we started to open up. We were above the zero line, but we were sitting on the 20, which meant we were still in an uptrend. All right, so when this started to open up and we started to see more distance between the signal line and the MACD, which this histogram was telling us, it was time to take the trade. All right, it was time to take the trade. It hit our target, which was, my target was 58.20. It did go up a little bit beyond that, but that was a perfect trade. All right, so this is an example of a trade where it did start crossing below the zero line, but it stayed trending. The trend never broke. And so once it consolidated, it gathered some strength. And typically when you see consolidation, it's either gearing up to break out or it's going to give up. It's going to run out of steam. So that's what we did. And that, was a really, really good trade. Okay, so here, we did not trade the open. Okay, we didn't trade the open. However, if you can see, we're above the zero line. The MACD is crossing under the signal line. That triggers a short. So if we were trading the open, we could have gone short. And, it took a while for it to come down. That's why we really didn't trade. We really didn't start getting in anything until here. But had we done this follows the plan, we would have been short. And it took a while, but it would have got to where we wanted to go. Now, what we did, we waited for the cross. We were below the zero line, waited for the MACD to cross the signal line, and bam. Now this chart does lag a little bit, but what we're doing is we're looking at the histogram, which is telling us the signal line and the MACD line are getting closer together, which is signaling that there's a good chance that it will cross and give us an entry. So again, we can be aggressive and take it as we're anticipating the cross, And then if it doesn't, if it stalls out and we don't get into the green here, it doesn't cross, we can bail out. Very, very small loss. Or it may be a tiny gain. But here, nice move right up to the 20, which is the midline on the Bollinger Band here. And we did take the pullback, which was, it's not an ideal thing, but it was just a little scalp. And I told you, I don't like scalp. We tried another scalp and got stopped out. But, that's why I don't like scalp. So just now, we sat here, we waited after lunch. Guess what? We're below the zero line. The MACD, it did dip on this pullback, but why shouldn't you have shorted it here? Why didn't we short it here? Number one, look at the Bollinger Band lines. Look how it's contracted. Number two, we're below the zero line. Not going to do that. So we waited for the cross and, went long, and this is the trade that we just took. I mean, the strategy is simple. You just have to be consistent, be disciplined in executing it. So this was the last trade right here. This is the two scalps we had inside the big move. I did try to scale out on one, which, we're trading 5 micro contracts. That I don't like scaling out, but I did it to demonstrate it to you guys. But that's not how I trade. I have a target, and once it gets there, yeah. Now when we start trading 10 micros, I'll take half off, and then we'll leave, more on to see if it goes. If it doesn't, then we just bail out and lock in that profit. We'll start over again. But right now, it's about getting you guys comfortable, knowing when the signal to get in, knowing even though the chart looks good, when to stay the hell out of it, because you're likely not going to get a big move. Like I like at least 5 points. Sometimes we have to take the trade off in less than 5 because it fails. But it is what it is. Did I say I was trading? Yeah. I mean, 130, 233, usually around 230 is when we get a nice move in the S&P futures. And so if I'm asleep, I'll wake up. Most of the time, we just fall asleep on the couch anyway, watching TV, and don't wake up till like 1 or 2 o'clock. Because we'll take a shower, sit on the couch, watch our show, fall asleep, wake up at 2 or 3, then go get into bed. And that's it. All right, so look at what's about to happen. Look at what's about to happen. Now this black line, this is the 50-day. The 50 period moving average. I stuck this in here because I was using it as a reference last night. But look, we're working on getting the short signal. So we got to be patient, wait and see. I'm not going to be aggressive right now. But if I was aggressive, I would get in. Oh, you're not looking at the 50 on that chart. That's another chart I have on a different screen. But this is where my stop would be. Now, obviously, the closer you get to this, the better you can manage your risk. But I'm not the volatility just isn't enough for me to, risk it right now, to go in aggressive. Well, the way it's set, the way that my ATM is set, it's set at 40 and 10. But I don't leave it at that. I readjust the stop loss based on the chart, and I readjust the profit target based on the chart. And if I'm trading multiple accounts, I'm going to be trading, it's going to look different anyway. But yeah, that's what I like about the futures. Now you don't want to sit and watch the futures all night long. You don't want to do that. It's just a specific window, like an hour or so, that you get this type of volatility. You get this type of volatility, and you can make a decent trade. Let's go back to day before. Look, there it is. There's a sell-off. It's 2 a.m., 3 a.m. to bounce. It was pretty good yesterday. Now here, if I would have been smart, this thing trended up from the time the futures market opened up again at 6 o'clock. Look at this. It closes at 5, opens back up at 6. When it opened back up, this thing just trended along the 20 all night. Now, I just caught the breakout, when this thing opened up. But, had I caught this, this thing just trended up all night. It's beautiful. But, this actually helped. This is what we did today, what we talked about today. You want to have a rule until you're able to really read price action and be able to put the pieces together. When you can say, hey, the chart is starting to show that we're gonna, the volatility is picking up. Look at the volume right here. Look at the volume on this. All of a sudden, the volume started picking up, and it did fall down in through here. But look at the volume come in and drive the price up. All you need to be able to do is to read the price action. And then you can use these studies to help, give you evidence to what you're seeing in the price action. No, I don't need alerts. We're only trading one instrument. We're not looking at different instruments. Like now, some nights, if it's really quiet, I'll look at gold, and I may trade gold. But for the most part, I'm just looking at one thing. I don't do alerts. I don't even do it when I'm trading equities. I don't trade alerts. See, it's really, really simple. The problem is you get in and you start trying to follow people as trading all over the place. You can't do that. Now you just got to focus on you. You just got to focus on you in your deal. Because if they're sitting there trading 20 accounts and all of that, you're not, you go in and you buy 20 accounts and you try to follow them, you're going to wreck yourself pretty quick. Because you're probably not at that level. 99.9% chance you're not at the level you need to be. You have to learn how to execute. It's like we talked about yesterday. But I'll post this so you guys can see. This was just more of an example of how we use the MACD. And you see how it's trading. We haven't crossed yet. We're trying to. They're getting closer together, which means the histogram, the bars on the histogram are getting shorter, shorter, shorter. And once it crosses, then you'll start to see it turn down. But if it crosses above the 0, that's a clear sign that there's a really good chance that we're going to pull back below this 20 and just keep going. But we got to be patient. Got to be patient. Yeah, copy trading is not for the weak. You can copy trade somebody else, but if you don't have the mindset to be able to do it, you're going to wreck yourself. Now, you can learn what they're doing, and then you trade based on what you've interpreted. But you got to be careful with that, man. It's real quick. And if they do something, it's like if I'm trading and I do something that's against my rule, and I do it because I see something, I'm reading the price action and it's telling me something different, then people go crazy because they're trying to copy, versus understand, all the elements in play. All right, but I'm gonna save this recording so you guys can have it to go with what we talked about in our session today.